Good morning, everyone. Welcome to Admiral Markets. Thanks for joining us today in the live trading room here with Admiral Markets. 25th of November. We're going to take a look at the Forex market in just a second, but this PowerPoint I want to show you first of all. This webinar is intended for a global audience, and it may not be suitable for all viewers. To find out if it is suitable and viewable for you, please take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please be aware that trading for exchange and in general also other financial markets and products is high risk and it may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. By continuing watching this webinar, you agree with the disclaimer mentioned here, and you can always request a copy of this disclaimer or both disclaimers by contacting that appropriate entity at admiralmarketsglobal.com. So a very good morning to all of you, to Edith, Morton, Bob, good to see you. Thanks for joining today. We're going to take a look at trend lines is the specific topic for today, and how to use them. Well, we can, of course, use them with other confluence things like moving averages and fibs to see what, or at pivot points for that matter, to see what kind of levels have the strongest support or resistance, the strongest likelihood of a bounce or a break. But you can use trend lines obviously for defining the trend as a trend channel, for instance. You can use them for opportunity when the price breaks through it or bounces off a trend line. You can use it as a filter, for instance, if you're trading on the 4-hour chart and there's a big trend line on a weekly chart that's close by. That could be a filter. You can use trend lines for a trigger. That's kind of the same as the opportunity in this case, with the difference is that the trigger is closer to the entry spot, and deciding the entry could be even an entry upon the break or the bounce of the trend line. The difference is, of course, between trigger and entry is the fact that with the trigger, you're interested in entering, but you're still looking for other things to enter. Maybe a candlestick pattern, for instance. The entry is a direct market order at the trend line. I like the candlestick pattern confirmation because it gives a bit more, let's say, it takes away a bit of a bias before taking a trade. You at least let the market show you whether there's a response to the trend line or not. Let's see, let's take a look at the calendar. I grabbed the wrong link, 1 second. This is it. So today we have some German GDP news. We have Bank of England governor speaking USD GDP and CAD retail sales. Quite a lot of events today. This week, of course, first of all, it is a bank holiday on Thursday in the US, which Thanksgiving, which means it could be some lower volatility on Thursday. Friday, maybe too. It is the last day of the month, so it could be wacky as well. Why? Because positions are potentially closed for profit or for less loss, and you see, of course, some reaction to the fact that the market traders are booking profit. They're showing results to their investors, and that's why I think the market is a bit more up and down than usual. But that's just my impression. I don't have any statistics necessarily saying so, but this is just a rule of thumb that I've heard and have witnessed. So. Alrighty, with that said, let's take a look at the euro dollar. I know that Nenet yesterday was looking for short at 124.40. In my heads up video that you can find here, by the way, every Monday at the Wave Analysis, you will find a weekly overview of major currency pairs. It's a video, often between 5 and 10 minutes, not too long. I was looking for 125.50, and price seems to have stopped at 124.44. And yes, there is a good chance that we will see a fall now in this regard. If you look at trend lines, however, we would have to put a trend line like this, indeed, cut through a bit of the second bottom, and we could have a break. Obviously, if you put a trend line like this to connect the first two bottoms, then price is still above it. So that depends how one uses the trend lines. This is already looking at a down break. I skipped the fact that this is certainly the downtrend. Obviously, if you connect these resistance spots, we have price hitting these tops frequently and often, and price is still below it. So obviously, very clearly in a downtrend channel. On the daily chart, 4-hour chart too, no doubt about it, price within this downtrend, and actually broke this, depending on how you draw the trend line, you can draw like this, you can draw like that, but ultimately broke the bear flag. So on the 4-hour chart, we had a strong impulse. We had a correction, as we were saying, that would be likelihood of a bear flag and a turn for downside. We were saying ever since this bear flag was started, and that indeed happened. So we had the fall on Friday. Excuse me, I have a bit of a cold. So we had the break, and now I'm expecting indeed a pullback and continue within that downtrend. The only thing that would change my mind about the bearishness is if price really breaks above the trend line and breaks above these tops. Then we get into neutral zone. Otherwise, all of that is bearishness. We can put a fib from this top or from this top like that, and we stopped at the 38.2 fib. And I think yesterday on the video, I actually used the higher swing high, didn't think about it. That's why I had it a tad higher, but okay, it doesn't matter. This could be just as valid, this fib. And we had a turn at the 38.2 fib. So if we use trend lines, we can first of all identify that we're in a downtrend. Second of all, that we broke a corrective channel, which is bear flag. Second of all, third of all, that we are probably pulling back and continuing after we're breaking this smaller corrective trend line. So it looks like a classical break, pull back, and continue. And you can see that, I think, clearly just by drawing those few trend lines. So that's a good thing. So where to trade it? Well, if you join Nenet, you're already in that trade. If you joined me at 124.50, you missed it. Unless you, of course, 124.50 is very close to where it turned. So if you accommodated it, then maybe watch Nenet's webinar yesterday. Then maybe you moved it down 10 pips at this 38.2 fib. If you're not in that trade, Nenet is targeting 123.60, I remember, right? I think, yes, I think so, or 123.80. 123.80, yeah, 60 pips. That's why I got the 6 in my mind. So that's probably a bit of a conservative target, to be honest, but that's good because indeed there's always the chance. Or 123.30. True. There was a second target indeed. So there is a chance, and that's why I think that it mentions 2 targets, because there's a chance of this always before it goes down, and then the 50. So by the way, from a fib point of view, if it does get to the 50 or 61.8, it's still a good short territory. If it gets there, that's the question. Now, what if you're not in here, not in here, not as yet, and not in here as yet, right? We have to take a look at the breakout potential, where to take it. So that's a bit difficult. We can wait for this trend line to get verified. Let price bounce indeed off this trend line. Let's take a look where the trend line is, 123.95 at this point. Let me move it a bit lower, like this. 123.90. Where's 123.80? Let me take a look. If 123.80, then this trend line would actually not be valid because it would not have a second touch here. So there are 2 ways, I guess. It is to leave this trend line and wait for that break, or wait for the bottom break indeed to happen and try to catch it on a lower time frame. Regarding trend lines, obviously if you use fractals, it could be different, or pivot points. But at this moment, I don't see a trend line that is close to being broken. That's sometimes an issue with trend lines. From a practical point of view, we just don't have a break right now. But beyond that, let's just add some tools and we'll take a look at the pivot points. By the way, it is actually, if you look at this candle, if we zoom in, it's this candle that broke it right in here. that broke the steeper trend line. So an entry at that spot at 124.20 could still make sense because it's the same spot that happened a few hours ago. It still didn't move that far away from the breakout candle spot. So in that regard, that would be the other option. Either this break of this trend line or hook back to that same level, just a few pips higher at this spot. The stop loss, now we could use these tops. Nether was using a 30 pip stop loss at 124.70-ish. You could still use that. That's possible, but you could also use these tops now. It's a bit tight, but it is possible. The high point here is 124.44, so 124.53, for instance, would give a 33 pip stop loss at 124.22. And a target could still be at 123.80, and it would still be a 42 target with a 30-ish risk. 1 second, folks. About that, I have a cold, so I'll have to take a few second breaks sometimes. So that would still be okay. Now 123.30 would of course give even a bit a bigger R2R. Ultimately, if we don't get this double hook back, then the target is at least the -272 at 123. But in the long term, I'm more fond of the 122.36, the -618 target. That could be a bouncing spot, by the way, because of the other trend line, and you've probably seen it already before, but just in case, this monthly trend line, if you connect this bottom with this bottom and then this bottom, you have a very nice 3-hit trend line. And price roughly of that trend line, obviously a monthly trend line, so it's like a huge, it's quite a big zone. Depending on how you draw it, it could be 121.50, or if you were to perhaps move it up just a tad without noticing it, it's already 122, 50 pips higher. That's what happens with monthly trend lines. But obviously that zone between 121.50, 122.50 is where there's a bigger, all the way down to 120, this bottom, 120.50. It's about a 200 pip range that could be an area of a monthly support that has the potential of stopping price and letting it bounce up, letting it go sideways, and maybe even reverse, but I doubt it. I would more expect kind of like a corrective type of thing before we continue down. But why? That has to do with this triangle, this impulse, triangle, and I would expect an impulse again. All right, so that's the setup on the breakout candle here. Let me think if there's something. If you want to wait for that confirmation, see how this candle ends up. Oh, actually, it's a minute from now. But you know what I mean. That this candle, let it push through this band. That could be another confirmation. But of course, the lower the price, the less space there is to 123.80. But still enough space to 123.30. It ended up more like a doji. So it's not a great signal as yet. It's always still early in the morning. That's a bit of the risk with having a tighter stop loss as well. ultimately, though, even if this one does move up like that, I would still short it higher because then this was just unlucky. That can happen. You get a correction like that, but you can't, I wouldn't let it stop myself from taking a trade at the right spot because otherwise, you could wait forever like that. Then the short has to be taken from a higher spot, and the loss could be compensated with the second trade. Otherwise, everything is in a downtrend. Look, you see here, price below it, everything, moving average is aligned to the downside. Just has to still break below the daily pivot point. Looking at the Camarilla, we're actually knocking on the door of the L3 and try to break through it. It's a bit funny here how it slightly broke through it. So that's a good, I think a good sign. It's probably just a break, pullback, go, in my humble opinion. But I guess there's a German data coming, so that could always have its impact, obviously. Where's the L5? Let's take a look. L5, 123.60. The daily S2 is at, sorry, is at 123.30. Alrighty. From a 4-hour perspective, everything is also clearly bearish, by the way. Daily chart, very strong daily candle. Good daily breakout candle below this trend line. Good daily breakout candle below the 21 band. So the absolute safest stop loss is, or not safest, but I mean, no, not, yeah, safest, relatively safest, is 125.70. If one takes a short here with the stop loss at 125.75, for instance, it's a big stop loss, but one could easily target 122.50 in my opinion. It would be about 1.25 to 1 trade. But it's a relatively safer trade because there's no, let's say, tight stop loss, which always has a certain risk of getting stopped out, no matter what spot you take. So it all depends how one wants to approach it. But this daily breakout candle, that high of that candle shouldn't get broken. Otherwise, that's definitely the invalidation spot. One last thing on this euro dollar, by the way. You can always put a fib on the very first correction. Now it depends if you want to fib it to here or to here, by the way. Probably to here makes more sense, actually. And looking for the minus 618 turnaround there is always an interesting thing because you get a kind of like a zigzag like this, and often enough it stops at the minus 618 target. So that's always something to keep in mind. It's a nice trick. All right. With that said, let's move over to pound and dollar yen. Pound dollar is still stuck in this wedge, looking for a break either to the downside for with the trend breakout or to the upside, to the downside, sorry, like this, or to the upside for a false break and a rejection at the fibs. So that still stays the same in my opinion as compared to yesterday's video analysis I made for Admiral Markets, and I don't see any reason to change it unless price really breaks above this top. Otherwise, any upside is in my opinion, just a reduction for further downside still. And I wouldn't be surprised. I would keep an eye on the hourly chart to see how far this runs up. If there's any exhaustion wick, I would rather short it on the hourly. And I mean, you could even keep an eye on the 4-hour as well, by the way. Both would do fine, I think. All right, so that is the pound dollar, very simply put, actually. Now, how about the break? Because the upside actually is easier to trade because you just wait for in my opinion, you just wait for the wick, the rejection, and it's a quite simple trade. I like it because it's, you know, you have a clear candle. Stop loss could be above that candle. If it's a 4-hour candle, I would maybe go 10 to 15 pips above it to be on the safer side, because sometimes you just get a few pip pushed through the candle high. An hourly also, but maybe 10-ish. It depends. I like uneven numbers, so it just depends also, or it depends on where it stops. If there's a 50 level close by, I would go rather a bit above the 50. So it's not always a very precise number. It just depends also on circumstances. Is a 75 number close by. If the wick high is at 65, then I would rather go to 79 or 77. Because 75 always helps the market as well. 25 too as a support and resistance. 50 and 0 2. So it depends. If is the high of the candle at 70, right? Then I would go to 79 probably 2 or 80. If it's at 73, I would go still probably to 79 or 81, something like that, right? Or 83. Anyhow, so that's a simple stop loss. Entry is simple, and the target pretty simple too. You could aim for the bottom again, or for the real target, the minus 272 target at 155. The breakout is a bit more complicated here, I think. The breakout could be a 4-hour candle below this trend line, but it would have to be a candle that is fully, or at least more than the majority of the candles below the trend line. It would have to be a close below the near the low, and not too small of a candle, which probably will not happen. The hourly could have the same criteria for the candle that should be below this trend line. Now, I would be surprised if price pushes through. I would like to see a bounce here and then price breakthrough. No matter how we draw trend lines, it's all bearish, by the way. Like this, like that, like that. Everything price is below those resistance lines, as you can see. We had a clear impulse here. We are clearly going sideways in a triangle. So there's no reason for me, in my opinion, to look for longs, as you can see. Looking at the moving averages and the Camarilla from a different perspective, you can see price is going in the 21 band, but never really broke above it. It just has some wicks here. That's all. On the 4-hour chart, that is. 1 hour, you see price kind of rolling with the moving averages. That's just this kind of consolidation on the 4-hour chart. If you see price like this on the hourly, it's always good to look at the 4-hour, and then you see, or any time frame, you can always zoom out one time frame and you'll have more understanding what's going on. And let's take a look. Yeah, we're at the L4 already. Wow. So from a Camarilla point of view, this is already in shorting territory. I guess from a Camarilla point of view, we would like to see a hook back to the L3, which could be a good short down to L5. All right, let's move over to the dollar yen. And Bob also has a cold. Yeah, it's probably the season, isn't it? End of November already. Unfortunately, the time of the year is, I think, creating this mess around us, fortunately, regarding the colds and stuff. Let's see. Dollar yen. Now, in my opinion, still looks bullish. We just had a bullish candle here last hour. Also kind of a correction like this. triangle. Maybe we had yesterday a trend line break like that. I took this break, in fact, right here, the green dot, and was aiming for 140 pips, I think. Well, that price didn't get there, but I did use a trailing stop. Two fractals behind, which is this fractal here. So I put it below this bottom. So it didn't get many pips out of it, but just a few at least. In any case, the price is still actually at the bottom of this wedge, this contracting wedge. So it could still be a bouncing spot with an entry right here or a retracement of this bullish candle. Retracement maybe to here, 82. The stop loss could be tight below the candle low, which is tight. Maybe 10 or 50 pips below it would be better. So that is 52, which is awkward because of the 50 number. So 47 probably better. That's possible. I mean, you do have some bottoms here still closer, so it could also make sense to put it even below that. 33, for instance, or 30. Now that seems spacious maybe to some of you, but that's not that bad actually, because the target could be all the way up at 119.68, 111, sorry, 119.50. So that's still about 170 pips there. So even if the stop loss is a 50-year, it really still is plenty of space. Alrighty, I'm back. Sorry. Let's see. That is are the stop loss potentials. The target, I think, is pretty clear. It could be 119.68. That's the minus 272 target. 120 is around psychological numbers. So I think a safe target is 119.44. 40-ish. Well below the target and also below 119.50. Other than that, let me take a look at different angles here. This is clearly an uptrend channel after a clear up impulse, so no doubt about the trend at the moment. Let's see. Yesterday was a bullish day. In fact, I wrote an article yesterday that stated that if yesterday is a bullish day, it's difficult to see. 1 second. A trade setup could be with a long halfway that candle and a stop loss below the low. What is the low of yesterday's candle? 117.57. So 117.47 indeed makes sense. 47. Okay. Yeah, it's the same setup that I already mentioned. In fact, I just didn't look at the daily chart as yet this morning, but it's actually the same as I mentioned when looking at the hourly. In fact, that's funny. Claudio is asking what my opinion is about the last night's statement of Kuroda. I actually didn't look at it. Didn't take a look at that statement as yet. But Claudio is saying that it sounded bullish for the yen, which could be, that's probably why we saw price move down so much actually relatively. Technically speaking, to me it seems like at the bottom of a wedge. I don't know, as I didn't look at it, I really can't comment that much. But from a technical point of view, I think it looks good for a bounce. Yesterday we already had a break. This could be a break, pullback, continue. Pretty close to support, and resistance is still not. I mean, it's close. 120 is close, but it still has some space to that 120. All right. No, thank you too, Claudio, for that heads up there. So it's good for everyone if you're interested in Dalian to check that out, just in case. Let's move on. I think this is as far as I can see clear, I think. You can take a look at moving averages. Clearly, price is way above it on the daily. 4 hour, we're back in the 21 band. So far, the 21 band has been a perfect guide for a retracement and follow through. And even here, it didn't even touch it. This could be, again, the same. The breakout could be, again, the H3 here. Price pushes through the H3. So if one doesn't like the bounce idea, one could wait for the breakout. Either take the breakout immediately or let it break, pull back, and go. And take a look at how the candlesticks look like when the break is occurring. And by the way, there's a link from Claudio in the chat for that statement in case you want to read it, okay? Aussie, I was doing yesterday's recap video heads up, and I think the Aussie was about here. I say this looks like already the bouncing spot for downside, and that worked out pretty well. Indeed, downside from here, downside upon the break. So if you watch that recap, you had a heads up there. This broke during last week. We talked about the break here as well. That was a good trade. I missed that because of the fact that it happened during my night on Wednesday. So it was after our session on Wednesday. And we were talking about the break, that the fact that this was a down impulse, a downtrend. This is an uptrend channel, or up channel at least, but corrective compared to the downtrend. And indeed, the break did pretty well. If you followed the highs of that candle, you got out about here for, well, it depends exactly, not many pips perhaps, but 50 maybe. Sorry. Then we had the classical break pullback, and that's why I was looking for bearishness, because I was expecting the continued part of the story. So that was yesterday's trade. Now today, it's not as easy, I think. Obviously, let's see. Yeah, we are close to support. The only trend line left is this horizontal trend line. Then we have the 85 bottom close by. This could be a case where filters are gonna keep me out of a trade. There's a pin bar here as well. Bullish pin bar after a decent run down, at least 2, 4, 6, 8, 9 candles down. Bullish candle like that. At this point. What happens if we get a bounce? That's maybe a better idea. Not a big fan of the bounce. Let's look at resistance trend lines that could be worth keeping an eye on. This 4-hour trend line could be something if price gets there, around 86, 80, 87. Could be a good shorting zone. This trend line here on the hourly chart, $86.40-ish. if we put a fib as extra confluence, 86.33 is the 50 fib. $86.20, so that's a 38.2 fib. So that could be a shorting zone, but we don't know if price will get there necessarily. If it does, it could be an interesting levels to think about shorts. Otherwise, it's, I don't know, it seems to be a bit tough spot at the moment. We can take a look at the ARCAD. Sure, let's take a look right now. For those that arrived a bit later in the webinar, by the way, I see that a few arrived after the start. We talked about the euro dollar, we've talked about the dollar yen, we've talked about the pound dollar, and basically, and now the Aussie doesn't look that great unless bounce, as you just heard, at resistance. The euro dollar looks good for short, perhaps now even, otherwise at the break of either with the close below 121, 124.15 on the hourly. Pound dollar would be bearish, either a break to the downside or a false break to the upside and a rejection higher. And the dollar yen looks like a bouncing spot for upside now. As a quick recap, dollar ARCAD. ARCAD, I personally was looking at this candle here, this daily candle. There was already a pretty big breakout candle here engulfing twins, and we had the correction. And we started to move down. This was the main candle for me. Now, looking at the trend line itself, the break happened a bit later, in fact. '20th of November, there was a daily candle. That daily close was here. And we're still posting daily candles one after another. So we're definitely in a downtrend. Clear resistance lines above us. And there's a support level right in here. I did take a short earlier today on the ARCAD, on this hook back here, right in here. I also took an ARCAD short last week, twice. Now I forgot exactly where. Let me take a look. Well, yeah, it doesn't matter. Point is now it's a bit, I don't know exactly how you want to take it. Which time frame are you looking at? Daily chart. Because now it's, sorry, I have to sneeze one. Yeah, it's breaking through yesterday's low. It's right at the support. I don't know. I would rather take it on a hook back personally, but at this spot, I don't know. It doesn't seem to be the best entry. Let's see. Yeah, EuroCAD, we can look at that, no problem. Justinus, sure, I'll take a look at your questions soon. Let's see if Björn is saying if you zoom out more. I like the short potential, definitely. Don't get me wrong. I'm just thinking whether this is the right spot at this point. Just thinking about the entry. I took the short actually earlier this morning, although it was a bit different strategy here at this turning spot. I wasn't using trend lines or that matter. That's what I mean. But that trade is doing well indeed. Let's see. Kalian is saying 98.62. Yeah, if price gets that high, there's some resistance levels one could think of for trading, definitely. So that makes sense. Thank you, Kayleen. Now I understand. Yeah, got it. Yeah, it's okay. I don't want to bore people with going through those trades because I don't want to dive in too much into the past because otherwise people lose focus, I think. Occasionally I do that though because I think it's good to rehearse things that we discussed beforehand and then afterwards as just an exercise. But I don't want to do it too often because otherwise I think most of the time it's too boring for most people. But thanks for sending it though, obviously. So I thought you bought a new trade. If we look at now, yeah, I think that better to wait for a retrace at this point. Let it break this blue line and let it wait for a hook back again. There's a bullish candle here on the 4-hour chart, so it could be wise to wait for the break of that, the bottom of that, the low of that candle. The other shorting fib from here to here. There's always a chance that price could get up to the minus 618 target. So 93, 97.35 for instance. That could be an interesting short zone. Stop loss, let's see. Let me get rid of this fib. I think the stop loss would have to be above, in that case above yesterday's high, which is 97.70. Yeah, so 97, if we put back the fib here, $97.35 is the minus 618 target. Yesterday's high is 97.68. So an entry could be here with a stop loss above this 4-hour fractal. So that's what I would think about the OddCAD. Otherwise, quickly, in this case, looking at last week's trade, I was actually indeed here because of the, actually said that live in our session last week, 87.98.54 I was saying, when price was about here, indeed made the upside. So that was trade number one, and then later that week took it here again, second time, for the run down to approximately about here. That's something we discussed in this room together, in fact. Just a quick recap of that. Okay, so we can now move on to EuroCAD. Let me put on the different template. EuroCAD is not as easy at this point. Very bearish candles. Very bearish weekly candle. So last week's high is definitely going to be something to keep an eye on. Yesterday was bullish though, unexpectedly. So if we put a fib on that very first swing high, swing low from here to here, what would be great is a short from the minus 272 or minus 618 target with a stop loss above here, I think. Shouldn't be too bad. Trail stop, I would say the 1 hour tops, or at least the 4 hour tops, at the very minimum. And there's a good chance that that would be rejection because we got this first impulse, which is probably the first part of the zigzag. We'll probably get a bigger zigzag like this up to the targets, which is then squaring up these bearish candles. We are then squaring up the bearish candles on the daily chart and the weekly chart. We have a clear downtrend, clear low lows, low highs. Yes, there could be some levels to be aware of as a support. So there could be a chance that this was the very last downside. It's always possible. And that this is close or reverse for upside. But I could only really objectively trade any of that upside if price breaks through at least the top in this resistance line. So it has to break through that resistance. Otherwise, it's still in bearish territory, and I would look at here for a downside. Now, let's say price moves up, finds rejection, which is likely, but then finds support again. Yes, then it's possible that it will break next time. That's why I say use a trail stop, just in case it does this pattern of up, down, up. One doesn't get caught still in a loss, whereas the trade was up pretty decently. In any case, the likelihood of this becoming a rejection zone is high, even if it is a turnaround. Why? Because even turnarounds go with ups and downs. So when you have when you have these zones like this, these are high probability zones, no matter what price will do. Basically, there are three things going on. It's a downtrend, price is at resistance. Now I forgot the third thing. Anyhow, point is that the point I want to make is that even though this could be a trend change from here like that, the chances that this will stop here for at least some downside are high because it's resistance in a downtrend. And even though that this level right in here could eventually become support, and we can get a potential inverse head and shoulders, perhaps like this, these pips from here to here is a high probability. You see what I mean, right? These are like higher probability zones because of that much confluence. So no matter what will happen after that, this is a high probability part of the trade. So how high is high enough? In my opinion, Kaylin is asking about 4092. 4092 is possible. It's close to this minus 272 target. I have 141 as minus 272. So 141-ish indeed. Perhaps 141.60. That would be even better. The higher, the better. But we don't know if it will get that high. If it gets to the minus 272 target, and I see a wick there, I wouldn't aim for this blue line. It's too close. But I would aim probably for the 38.2 fib. With the stop loss above the wick, the candlestick wick, and the target at the 38.2 at 140. Excuse me. If it gets up to the minus 618 target, same story, stop loss above the wick, entry upon the close of the candle, but then I would target probably the blue line, which would be the 50 fib of the future fib, or just above the, you see, if you put a fib from here to here, where the target is, then the 50 fib of that is indeed about there. Let's take a look at Euro odd. Alrighty, so if we connect trend lines here, we'll have a not so precise top line. Same story for the bottom line. And we have a bottom line like this, or even a channel. Euro dollar, by the way, is fighting up, unfortunately. Last hour's doji indeed was a bit fortunate. But if it does break 124.42, then I would still look for shorts higher. If your stop loss is at where Nenet has it, then it's a bit safer at the moment. Alrighty. This Euro odd is basically has an impulse here and going sideways. So all in all, it could have a decent chance of breaking to the upside, but both breaks are possible. As you can see, it looks like a range. It is a range at the moment. We have to look at the tops and bottoms for potential trades, or the breaks of those tops and bottoms. At this moment, price is too close to resistance for a long, and not close enough for a short. If we put a fib on the very first swing high, swing low 2, like this, the minus 618 target at 145.82, I think it would be a good shorting zone. Stop loss could be above this top here, 146.30-ish, 35, 37, 43 perhaps. And the target, well, you know, this is the thing, because of the fact that this is an impulse and this is sideways, there is maybe a slightly higher chance of a bullish breakout. And I have to warn you that here we broke the top 2 of the previous top, so that's always a bit dangerous here too, by the way. So maybe waiting for some price action confirmation is useful at this target. And trend lines and top. Now I lost my. L3 is at 143.75. Well, that could be the target. A lot of pivot points here at 143.80 as well. So that would be the main target, 143.80 for downside. L3, 3 pivot points, a lot of stuff. Now as this gets higher, there will probably be divergence between these 50-minute tops. So that would be another reason for looking for shorts. Shorting opportunities, excuse me. There's a daily R2 as well at that level, another confluence spot. So that's my view on Euro odd. Let's see, Claudio, you moved the stop loss at entry and it was hit. Got it. Oh, the Euro dollar, not this Euro odd. Okay. Move the, okay. So I guess you got that for 0. That's what you mean, right? If I understand you correctly. Got it. 5 pips. Okay. Let's take a look. Yeah, it's not able to break through the daily pivot point and the 21 band. That's something you won't see with trend lines. Trend lines, of course, we had 2 options waiting for this trend line that never broke as yet. Or the more aggressive, steeper one, as we said, which already broke, and this was the breakout candle. That break is not doing that well, probably because we bumped into the daily pivot point and perhaps even the 21 band, although I think the daily pivot point is more the reason why it's bouncing. Anyone who entered at Nenet's spot is about break even again. Let's see, maybe we can go up to the weekly and turn there if we put a fib back on. There's also a chance that the 50 fib could be the turning spot at 124.64. Let's see the dollar yen again. Not making much of a bounce. It looks like a bouncing spot to me, but let's see if it does. And then we had someone, let's see, Bob was asking, I think, yes, Bob is asking for pound yen. Let's take a look. Pound yen looks like a good bouncing spot too, I agree. That also had a break yesterday, this trend line. It doesn't have any trend lines to break, but maybe this one, in fact. Oh. But I wouldn't be surprised if a break to the upside here. I took yesterday long, in fact, on the pound yen as well. So another upside opportunity when looking at all these time frames. There is some divergence, by the way, to be cautious of. That's true. For the moment, it's a single one, though, so maybe slightly double, actually. Let me take a look. Actually, it is double. That could be a bit of a warning sign. Daily is still good, though. Daily had a bullish candle yesterday, so price action is not showing any danger as yet. 184 bottom here is yesterday's low is important. Maybe the 4-hour candle is the best. 4-hour candle, bullish candle like that, with a stop loss below it, could still be worth it. Although it is indeed showing double divergence in the 4 hours, so it could be therefore a bit riskier in that regard. This was a high probability trade again at the green dot. Why? Because even if there was divergence, there was a correction like this. But even the correction has to get corrected, which had happened. Before you got downside again. So those are high probability trading spots. When there's an uptrend, when you're at support, when even if the trend is changing, there's often enough correction before you get something like that. Kaylin says 182. I don't know. It's possible. If it does correct like that, it could go down to this support level again, indeed. At the moment, I'm still definitely bullish, even despite that the divergence. And a break above, let's see, a candlestick, 1 hour candle above this trend line, or maybe 30-minute. Yeah, it's more of a 30-minute trend line. And above the daily pivot point could be a breakout. It's just a bit awkward how this up and down, it's not easy to trade. But if there's a 30-minute candle close above the daily pivot point and the body is outside of this trend line, that could be a breakout trade with H3 or H4 as a target. Stop loss below here. Or looking at this 4-hour candle. We need to end up bullish, and stop loss would need to be below, or could be below, I should say, could be below the low. Dollar yen is basically also the bullish bouncing spot. Dollar yen, we're looking at this 1-hour chart. You see prices close to support here and here. So this looks like a bouncing spot, and it is bouncing up as we speak. Stop loss at 50, 117.45-ish with a target of 119.40. Tighter one could be, a stop loss could be 117.57. Medium is 117.40-ish, 45-ish, and the looser one is 117.30-ish. Just a quick recap of the dollar yen. $116.60. Well, probably eventually. I don't know if now, though, indeed. It's difficult to say. If you're looking for this to correct like that, it's certainly possible. Maybe minus 618 target would be an interesting bouncing spot, 116.40. But it doesn't have to be. It could make a wedge like that and then just break to the upside. But there's nothing wrong necessarily of missing a wedge. There are plenty of other currency pairs, so if you rather wait for deeper retracements and targets, that's fine as well. There's nothing wrong with it. But yeah, the question is if it gets there. We don't know. Dollar CAD, this trend line, important. After that, this trend line, not that great of a situation at this moment, I think. In fact, if anything, it's more closer to resistance. It could still be, let's say, more of a rejection area, in fact. Pivot points are a bit awkwardly close by to that rejection area, though. So not a big fan of the dollar CAD. What else? Euro yen, not a big fan of it. The correction was pretty deep. Pound odd. Let's see, we could put a fib from here to here too. A bit of an awkward environment on the euro odd and pound odd. This recent price action quite choppy and spiky. Ultimately, though, I remember we talked about. Let's see. No, I forgot. Okay, it doesn't matter. But anyhow, it was a good fall. This was a likely bouncing spot. This bouncing spot we talked about. I remember now. Then here was a rejection. That was indeed likely going to bounce. So it looks like more of a zigzag, if anything, still within this impulse. So some price action reaction here at the minus 618. That could be interesting. Alrighty, pound New Zealand, I remember talking about short in here and then the long at this target. And at this spot, I would say we have the same rejection potential, let's see, at roughly 50, 61.8 fibs. This is an unsquared candle. So looking at that, it would be the same recipe, looking for shorts at the 50, probably 61.8. We could put a fib again, yet again. This is more fib trading now at the moment because there's no real trend line. There was a trend line like this, but that broke already. That could have been a good long for a trade up to these targets. That trade is behind us though, so it doesn't make sense to talk about it. Otherwise, there are no real trend lines to discuss on this particular pair at the moment. But I think that a minus 618 target, 61.8 roughly here, that could be a bouncing spot again. But there were good trades from here. I remember talking about, and here, indeed, those were good. I think the same we could say from here, rejection. Or if you did take the breakout, that would be the target. Does anyone else have a pair of mind? I think we did look through almost all of them, in fact. Euro pound is, I wouldn't be surprised if it moves up for one more rejection down to at least this bottom, personally. Let's see. Ilias talking about, the election indeed on gold, in Switzerland, on the reserve that the central bank should hold in percentage, the reserve of gold in percentage of their assets should be, the election or the referendum is asking whether that should be 20%. There was still a pretty sizable group of unknown, of people not having an opinion or not knowing what they will vote as yet. People who knew what they wanted to vote were more leaning towards yes, but that was, I think, a week ago, so who knows. If it does pass, then there will be more demand for gold. That's probably why Ilias is talking about saying gold upward. Let's see. That's always a risky event like that. We really no idea. if it would have a yes vote, one would expect upside. If it would be a no vote, would assume maybe slightly down, or maybe neutral, or even strongly down. I don't know. It's difficult to say. So be careful of this pair in that case, and even the Swiss pairs in the essay, as obviously the Swiss franc could have its impact with that vote too, not only gold indeed. Good point. Euro New Zealand? And then I guess we'll wrap it up. Cheers, Bob. See you soon. Let's see. This is Euro New Zealand support line here. Trend line here. But awkward, these ups and down spikes. It's again a zigzag, I think. I don't know. It looks like we reached the minus 618 target, in fact. We'll be interested to see how price ends up this hour, or the next hour, and the hour after that. How does it respond? Is there some rounding here? Is there some bearish candlestick? Or does it keep pushing through? But to me, it looks like it's going back to rejection. So for me, looking for shorts makes more sense because it's more of a zigzag. It's more of a choppy impulse pattern. So if anything, now it's too late to go long because we already had a tremendous impulse behind us. And it's more time, I think, to look for reversals like here. The TP, honestly, I'm not a big fan of the Euro New Zealand now. But the TP, well, assuming that, let's say that for this type of trade, we wouldn't want to aim below this trend line. So that would be probably a deep fib of this upside. If it goes up to here, let's say, any of these fibs, the 50, the 61.8, 78.6, the deeper, of course, the more tougher it is for price to get there, and the more bounces along the way we would have to live through. That's why we could always use a trail stop loss, by the way. Ultimately, it could even go as low as 880.6, which is kind of like, would be potentially head and shoulders, maybe, perhaps, inverted head and shoulders. Also, don't be aware of the fact that if it does move slowly like this, it's making more a flag, that's a danger sign for any shorts because it could mean that this is an up impulse with the bull flag, and we can do like that. In that case, you would want to reduce your risk with that trade. Kaylin is already in the short. Congratulations, great job. At I don't know exactly what level, but could be up a few pips perhaps. Great job. Those that didn't take the target or close to the target, yeah, you could wait for that. As I said, you could wait for the candlestick pattern and see how price responds to this level. Is it flying more? Is it more impulsive candles like this? Then I would be okay with living through this pullback here, and then probably seeing this again and then moving that stop loss above here. If it does a bit more choppier style, it could be good even to exit or at least reduce the risk to close to zero. This last hour closed and there's a bit of a wick. It's maybe a shooting star. It's not a great shooting star. I'd rather wait for, let's see, another wick on top of this candle. That would probably confirm that this was a shooting star. Even here could be a short, but then probably stop loss would still have to be higher. I wouldn't trust this high as yet. That's my point. That could be quite a spacious stop loss though. Okay, then 159.40. Nice. Looks like we had some reaction at least. But I'm personally still cautious with using this as a stop loss this high in any case. The other alternative would be just a 30 pip stop loss above this high. That should be enough in most cases. Let's see, that would be 159.83. That would be an alternative way. So let's see how some of these trade ideas have developed. And we'll be back tomorrow. Let me take a look with what, the strategy, of course, tomorrow. Tonight, by the way, we have a webinar on new tactics and methods and stop losses. And tonight, instead of the usual Thursday evening, we have it tonight, by the way. Then tomorrow, I have Forex strategy, and tomorrow evening, Nenad is going to talk about trend and reversal patterns in price action trading. Oh, sorry, Justice. Thank you for your reminder. That did indeed escape my attention. Let's see. I would like to ask what books or videos can really help me to learn Elliott wave analysis. I know there are many of them on the internet, but maybe you know best sources to get that kind of information. You know what? It's probably even better if I just write you an email about that. It's easier. Why don't you write me an email, if it's okay, and then I have your email address right away. So I'm not sure if you see it. I wrote it at the wrong spot. Let me write it again. You see it? Oh, okay, cool. Well, I finished it anyhow, so there's lower. You can see it lower as well. Alrighty, so good trading, happy hunting, and see y'all soon. Cheers.